Hello and welcome. My name is Cody Hilbun. I'm a founding partner at Bespoke Capital Advisors. And on this episode of Tailored to the Exception, we're going to be discussing the art of the bespoke investment philosophy. At Bespoke, we believe successful investing comes down to four main disciplines. Investment discipline number one, cost efficiency. We want to minimize costs. We do this by owning individual stocks, bonds, and/or other tax-efficient vehicles. High fees erode returns over time. Active managers charge higher fees, but rarely outperform the market consistently. At Bespoke, we believe by cutting out the middleman, that allows our investors to keep more of their hard-earned money. Investment discipline number two, tax efficiency. It's no secret that most of the Bespoke clients are all in the highest tax bracket, so we make minimizing taxes an extremely high priority. One of the ways we do this is by using tax-advantaged accounts for some of our longer-term investments. Another exciting way that we can help you with your taxes is through something called direct indexing, where we can customize your index investments to improve tax efficiency while potentially enhancing returns. Because our clients often have big tax years from the sale of their business or when they have equity in their business and they have a second exit event, a strategy called tax loss harvesting can help reduce some of their tax liability in some of their greatest income years. The last point on tax efficiency is, when possible, we want to hold our investments for longer so that we recognize long-term capital gains versus short-term capital gains, which is better for you as the investor. Investment discipline number three, asset allocation. We want to be diversified amongst stocks, bonds, real estate, private investments, and the list goes on as your net worth increases. As your net worth increases, your need for liquidity goes down, meaning access to private market investments becomes much more attractive to you. And I'll tell you why. Not only does private markets give you additional diversification while making you less correlated, but it can actually enhance the potential opportunity to outperform the public markets over time. This is something we call the illiquidity premium. So in summary, we want to align your asset allocation with your risk tolerance, your liquidity need, and your overall time horizon. At Bespoke, it's not just a sit it and forget it strategy. As your financial situation changes, maybe your need for liquidity goes down, or maybe your income needs go up, we're going to fine tune and rebalance the strategy to meet your needs. Investment discipline number four, and maybe one of the most difficult to follow, avoid market timing. Look, I get it. I know there's a news headline flying at you every single day, but let's all remember it's time in the market, not timing of the market that matters. Consistently investing over the long term tends to yield better results. And let's remember to embrace volatility. Market fluctuations are normal and can oftentimes be great opportunities for longer term investors. And finally, the key is stay disciplined. Avoid panic selling or chasing the short-term trend of the day. In the end, successful investing is a marathon. It's not a sprint. Stick to your investment plan, stay informed, and avoid emotional reactions to everyday market noise. Thank you for joining us on this episode of Tailored to the Exception. I'm Cody Hilbun, and remember, whether you're a seasoned investor or you're just starting out, having a disciplined, well thought out game plan can help empower you to make informed decisions. Until next time, stay curious and invest wisely.